So as a first panel, please join me, Ivan from BPI, the French State Fund, Christoph from Union Investment. Perfect, hey, good to see you. Torsten from Van Eck, great, and Bert from KfW, the French state, the German State Fund.
Be careful.
As I said before, we are at a point where now it makes sense for everyone to have a look at this topic. And one of the most pressing topics is how do institutions cope with this industry? How do they get prepared for this industry? So looking at this panel, we have a great representation of private representatives and public representatives. And therefore, let me maybe start in our home country with Germany, so the German State Fund, KfW. KfW executed its first on-chain commercial paper already quite early with Commerzbank. And thinking back, how did institutions view blockchain at that time? And how did you prepare yourself and the KfW as an institution for this digital asset market?
Yes. Thank you for being here and on this panel. Once again, my name is Bert. I'm working for KfW. I'm working in the Treasury Department. And as you said, we are looking into blockchain or DLT systems since 2016. So where we basically had the idea of how the Treasury could develop. In 2017, we did the first transaction, or at least a simulated transaction, on a blockchain. Why simulated? In 2017, we didn't have the law to have a dematerialized certificate. So we had to have a physical document. And how do you do that on a blockchain? It's difficult. You can't do it. So that's the one thing. And the other thing is we also would like to settle the cash side. And that was very difficult because there was no cash available which fitted to our risk appetite. So at the time, Ethereum was roughly 25 billion. Sometimes we issue up to 5 billion. So it would have been a fifth of the entire market. Just imagine the volatility in that market if we would take out 5 billion and then convert it back because we are giving out our loans in euros. So therefore, we had two essential learnings. We need to have a change in the law to be regulatory compliant in Germany, and the other thing was we need to have a payment which satisfies our needs. And in 2021, in Germany, the electronic security law was introduced, which helped us a lot because then we had a regulatory framework. And in 2024, the ECB was introducing an exploratory work where the ECB basically provided money on a DLT basis. So basically two things came together where we said, the learnings we had in 2017 can be now done in 2024. But we weren't inactive during that time. On the one hand, we looked at markets. For example, KfW is one of the biggest asset-backed commercial paper investors. And usually, as it is in traditional system, it takes 2 days to issue a new bond. So you price a bond, and then it takes 2 days to settle it, because everything has to be realigned, because we have the data silos. And I think this is a great enhancement of the DLT system, that we have basically a shared view. We can agree on data, which can be seen from different angles, but we are looking at the same data, and then we have the golden source. So this is basically what helped us to understand why DLT is so important for us. Do we issue bonds in Bitcoin? No. We will stick with the ECB. Do we make leverage of the system? Do we understand basically what it's capable of? Yes, and that's why we are always looking on the side of what's out there. I'm being myself, I was, at least until it was now moved over to the TUM, I was a mentor in the DeFi Talents program from the Frankfurt School. So basically we were trying to stay ahead to see what's going out there. And I even tried to be my own founder, which didn't work out too well because, if you found something, it makes sense to have at least 100% of your time dedicated to it, if not 200%.
Thanks a lot. And Ivan, you've been working from the French State Fund side already very early on, and also in the intersection of startups, regulators, institutions. How have you seen the attitude and dynamic evolve between these groups and since your journey has begun with BPI France? And can you maybe also introduce yourself for for a few seconds and what BPI has been doing in the space.
Yes, thank you. It's a pleasure to be here because it's really the heart of the European ecosystem, and it's a luck. I work at BPI France, so it's the French sovereign wealth fund. We invest a lot in tech and VC, and this is why blockchain influenced us. We're like, wow, this is a great technology, and maybe we can use it internally one day. So we began to invest, to do grants, loans, direct investments, fund investments in the space, and now we have around 250 million direct and indirect exposure, and this is the figures we gave to the UCB because we are supervised by a European Central Bank. So we do this very seriously, and we have seen the different steps. I would say that at the beginning it was only passionate people that were gathering from regulators, certain banks even, and but the problem was you had so much limitations. As it was mentioned, the cash leg was a problem. The regulatory framework wasn't fully ready. Now there are two things. There is the Genius Act and the stablecoin in US. I would say that it's a tipping point. You cannot go back. This is now, nobody can say blockchain is useless or you're losing your time because we can see direct influence on the monetary policies of the world with stablecoins. So the journey is not over. We have a lot of things to do together. And we hope that Europe will have the right answer, and that's why we're here. That's why we need to collaborate. That's what we need to invest more. And yes, this is key because this is the future of our financial services.
Thanks. Maybe directly to the private market side, to Union Investment. Christoph, maybe you can just introduce yourself as well and give an overview how your organization, where it stands today, what you have done in the space, and also what current initiatives around blockchain tokenization and digital assets you have, and your strategic goals.
More than happy to do so, Dominic. Many thanks for having me here. Christoph Hock, my name. I work for Union Investment, Germany-based asset manager, where I'm head of tokenization, digital assets. On top, you mentioned collaboration is really key in the industry. I've some industry roles. I'm IFAMA's chair for our tokenization task force. IFAMA is the European representation of buy-side firms, of asset managers. Additionally, I'm a board member of ICMA, where I'm also, ICMA is a global bond market association, where I'm also chairman of the DLT bonds working group. So as you can see, collaboration is really key for us. I think it's important that we bring all the various stakeholders together when further evolving a DLT here in Europe. So we need the public side, we need the private side, we need strongly collaborate with central bank, given the fact that payment on-chain plays a highly relevant role. We need to be in in-depth discussions with regulators for creating the framework. Where do we stand at Union Investment? So we've had also quite interesting journey when it comes to DLT. I started to work for Union, this was back in 2014, in my role as head of trading. And in 2015, I thought it's a pretty good idea to set up a workshop for the colleagues in the portfolio management department on blockchain. And set up a big workshop with also UK representatives from the sell side. And actually, I could motivate 5 out of 300 people at Union Investment to join this workshop, which made me look pretty silly. But then in the meantime, really interest was picking up, and from 2018, 2019 onwards, a real dynamic was kicking in for us, and the kind of moon landing, so to say, was 21 when we've been the first buy-side investor in a public DLT-based transaction. This was EIB, the European Investment Bank. They came with a native DLT-based bond. And we've been the only asset manager, by the way, managing to get invested in there because of complexity embedded with this technology. In the meantime, it's kind of normal for us. So investing in traditional tokenized assets, we have defined processes which we double-checked with BaFin as our regulatory body, where we've involved our external auditors also. So pretty robust framework, and now we are obviously with the entire industry chasing that tokenization is becoming the kind of new normal. So I'm fully convinced in 3 to 5 years' time, most of the assets we get involved today, they will be tokenized, because a token is a much more superior product compared to, Bert, what you are describing as a physical global document, which is a stupid pile of paper, which is sitting at the central securities depository in a safe. And so next steps in the industry will be to make the assets really smart. And I don't want to dig too much into the technology, but via smart contracts, you have a kind of programmability of assets going forward, and therefore, as said, my thesis is that tokenization will become the kind of new normal. And
maybe you can just explain what convinced you to move forward as an institution. Is it client demand, or do you see this picking up, or is it the regulatory certainty now? And can you dive into your role exactly in this entire tokenization process, for example?
To be fair, Dominic, do we see real client demand? Crypto assets, I will see it in a different way. But looking at tokenization of traditional assets, equities, then bonds, fund shares, do we really see demand from our investors? To be fair, neither from retail nor from institutional investors. But I guess when we're looking in general at technology transformation, it's kind of normal that you create an offering which then fosters a demand. Look at the iPhone, for example. Was back in 2007, 2008, when we went from the Nokia handhelds to smartphones. Wasn't there demand from mobile phone users? Did they go to Apple or to Samsung saying we want to have a smartphone? No. Each mobile phone producer was looking what's the kind of killer mobile, killer app we need to offer to satisfy future client needs, and it's exactly the same with tokenization, I guess. It goes beyond what most investors can imagine. So as said, we will have tokenization going forward. We will have 24/7 trading. We will have instantaneous second zero settlement, giving investors immediate accessibility on all their assets. That's an experience, a user experience, traditional investors they don't have. And via offerings from the industry, I'm sure you will create significant demand on the client side.
Great, thanks. And Torsten, from Van Eck, can you explain in yourself what your role is and also what Van Eck offers? And I think probably you have also a different view on current demand in this space.
Yeah, pleased to do that. So Torsten Hunke, I'm at Van Eck, General Counsel and Managing Director in Germany. So we established the first ETFs back in 2015 and have grown to one of the biggest also European ETF providers globally anyway. Van Eck does a lot in this space. Van Eck does a lot in the crypto space. We were also the earliest applicant for like a Bitcoin ETF in the US. I think we sent this application 4 times and always took it back, and SEC didn't like it and so on. At the end, we got some ETFs in this space. But in Europe, and that's more my role, we are looking into cryptos, like a bridge from both sides. One side is, of course, to get access to cryptos for traditional investors. That's like a business we started back in 2017, 18, when we looked into where could we establish securities that give like exposure to investors in crypto assets. We looked like multi-jurisdictional. There wasn't any crypto custodian in Europe that was regulated at that time. And at the end, we found the first custodian who did this kind of job in Liechtenstein, Bank Frick. So we established our first ETNs in 2020. So that's one of the first. There was just one other provider, but these were the first ETNs that really provided exposure for traditional investors for their securities accounts in cryptos. And we've grown this business quite a lot. There's a lot of interest also by retail investors in this kind of exposure, because it just gives you a lot of security. It's an institutionalized version also in safekeeping the cryptos and other stuff. But we are also doing a lot of other stuff. So we manage like crypto hedge funds or actively managed crypto ETFs, and globally, and in Europe also like a whole range of I don't know how many, maybe 40 crypto indices. And this was also one of the first businesses we started was in this regard, cryptos in Germany. And I remember when we went to BaFin and said, we need a license, this benchmark regulation license, and we are the first provider of crypto indices in the world at the end. We told them, you guys need to take care of end investors and make sure they understand what it is and that it's regulated, and that at the end they buy or acquire exposure into cryptos via experienced asset managers with policy and procedures and a whole professional organization around it, in order to avoid the FTX and other risks that you have and where you don't know what you do. And I think just my last comment, maybe a lot of people ask me how should I invest into cryptos, and I always say it's a whole big market now. You have like Bitcoin is just something to store value. But then you have also stable coins and smart contracts, you have Web3, you have NFTs and all this stuff. And if you don't understand this, you need to find like an active manager or like an index product that gives you exposure to like a small extent. I don't know what the best is. I'm not an allocator. We have people who work on that. But at the end, just make sure you distinguish. Bitcoin, that's like gold. It's a store of value. But other than that, all the other cryptos, it's super complex and we don't know where they are tomorrow. And I invested myself into cryptos and just took the biggest 20 or so. And also BaFin has a list of 30 cryptos where they say that's good governance and we approve them for trading on Deutsche Börse. So there's some guidance in this area. But at the end, if you're not the expert yourself, make sure you find someone to allocate for yourself. And then if it's Bitcoin, I think it's like a good diversifier, versus gold.
Could you add some? Yeah.
Dominic, maybe as a disclaimer for the audience, I guess most will be aware. So when talking about tokenization and assets based on blockchain, you have to differentiate between crypto assets on the one hand, cryptocurrencies, so to say, like a Bitcoin, like Ethereum, and on the other hand, you have RWA, real-world assets. And real-world assets, this includes the entire group of traditional financial instruments in a new wrapper, so to say, in a tokenized wrapper. And on top, it will allow you also to tokenize products where retail doesn't have typically accessibility to right now. So we talk about infrastructure, alternative assets, like private equity, private debt. So I think that's important to understand. And when looking at FunX products, they are focused on crypto. as an asset manager, we have both in our shelf, so to say. And Bert, I guess, for good reason, he was highlighting that the KfW never ever would issue, as of now, bonds with Bitcoin as an underlying.
Yeah, I didn't really answer that tokenization question because, maybe a few words on that because that's I would say the most important project right now that I'm working on. It's really tokenization of traditional products. And Christoph just said, there's not really demand from clients. I see this a little bit differently. So I'm asked by clients all the time, when do you provide your ETFs in a tokenized version so that we can, invest into something that is maybe even more cost efficient than the ETFs are today. We offer Sparpläne in Germany, savings plans, or we are an investor with no connection to Euroclear and Clearstream. We want to just have a position of your tokenized ETFs on the blockchain and all these things. So that's kind of the most important, or the projects that we work on the most right now. And the challenge really is to find the right regime. And there's a little bit of competition between Germany and Luxembourg, but also Ireland now picks up. CBI is very interested to talk to the industry and see how funds can be tokenized. But at the end, we want to be quick to market because there is demand, and we have crypto exchanges who prefer tokens over shares. And there's a lot of energy going into that as well.
Could you put some?
And we also discuss a lot. Yeah.
Could you give some concrete numbers, in terms of demand of your products? How much are they in demand in terms of assets being sold or assets under management you have in your products? And also, do you see, how do you see Europe's position in comparison to the US, for example, where now we have both regulatory fronts? And you said you were very active very early on in the US. Europe is probably a more fragmented market. How do you approach those two areas, and how do you see demand shifting, and how can Europe compete in that area?
Maybe because I have this discussion every day, so with my US colleagues, the key topic is in this area that you have two different regimes. You have Act 40 in the US, you have UCITS and AFMD in Europe, and you can't really mix it up just because it's tokenized. The distribution regime doesn't change, so you still have to comply with MiFID and all these requirements. You can't sell the US money market fund in Europe unless it's registered for distribution, nitty-gritty for professional investors in the Netherlands or the UK. You can't really promote these products. From a technology perspective, I think the US is a little bit ahead of us right now. Also with vendors, with the entire value chain, there are more participants who really support this kind of products. But in Europe, it's also there. It's just a little bit more, I don't know, it's more traditional or a little bit slower. Christoph knows this better than me, but I think it's a little bit trickier to find everybody in the value chain to promote a tokenized ETF, for example. Everybody's super careful right now.
Maybe Ivan.
Yes, maybe to react on this, Spyco is a very good example. It's a tokenized money market fund. And the funny thing, so we bought some, and nobody died at the risk management team. And they were quite impressed by the efficiency of the process. It's a basic product, money market fund, but the clients are SMBs. Why? Because their professional bankers never answer the phone. They see him every quarter. He wants to make commission on non-adapted products. You have a simple money market fund product that gives a good yield for SMB. And this is super interesting because, let's be honest, we all know that we have functioning financial services. The big names are doing the job. It's just that we will see a whole new market from different clients that are underserved and the younger generation. I don't invest like my father, and I hope my son won't invest like me. Every youngster has a mobile app, have exposure to different assets through his mobile phone, has a different views of investments, of yields. He would never leave so much money on deposit accounts, like our parents. And this is super interesting. And I think both worlds are moving at the same pace. And this is the key challenge for Europe. We have to adapt to this. We also have to have an adapted regulation to this because you have risk. Of course, when you see young people doing leverage trading on hyperliquid, my job is to tell them maybe it won't last forever. Maybe you should take some money out. But this is the big challenge. And where I fully agree is that we need to ally and to be ready. And the problem is that we have a fragmented market, but we have a common regulation. So maybe we need to be more common on the market because US has this unfair competitive advantage with the Genius Act, the Clarity Act that is coming, and they have also a strong political will to take this market. The crypto market is denominated in dollar, and through the stablecoin loop, basically every retail investor that has stablecoin have some US treasuries. So it's a great solution where we have some debt problems in France. I think everybody knows it. This is a key topic also. And if we can align everything and take advantage of the technology, yes, there is plenty of solutions.
Yeah.
And you have also invested in the state fund's own treasury part in tokenized assets, right?
Yes, of course, because we wanted to show other traditional players that you can buy these products, that they are trustful. Of course, you have some extra risk, but they are efficient and trustful and want to show that this is the next wave. And a player like Ophi Invest that have billions in money market funds, they should move. Like Amundi just announced their first ETF. Thanks God, it's running now because we're unfortunately running out of time.
Bert, maybe you.
Maybe I can explain why KfW is also looking at it and in which space, basically.
Yeah.
I think three major points we are looking at. We issue roughly 70 billion a year to fund our projects. So basically, we are quite a big player on the market, and therefore we have to look how the market is developing. That's point one. Second one is, if you look at the age pyramid we are having right now, in the next 10 years, roughly 30% of the workforce will go out of the market. Young people will come after. The problem is they are not the same size as the people leaving the market, so we have to have something like on our automation side. So we can't use our siloed system anymore. We can't have the media breaks, and therefore we need to look for alternatives. An alternative could be, and as it looks very promising, a DLT system, where we basically use this as an infrastructure where we don't need the media breaks anymore, and where we can basically go. And the good thing is we can have a front-to-end process basically on the entire chain, rather than having it basically into data silos. And the third thing is we see a huge dynamic from Asia. We see a huge dynamic from the US. And if we do things how we have done in the past in Europe, then we won't be able to compete with them. I think the ECB was saying that in 13 European countries, they don't have an own payment scheme. They are relying on schemes outside of their country, respectively out of Europe. So therefore, they want to introduce a digital euro. That's basically one of the core ideas. Unfortunately, it won't be able, at the moment at least, on a DLT basis. So therefore, we have to come together in order to make this possible to withstand some of the pressure from the global competition. So from the Asian and as well from the US. And the US is purely driven, basically, currently by political and, of course, by corporate interests, of course. And if we don't pick up the speed with them, then it will be the same situation that Visa or MasterCard alike, companies will basically dominate that even in Europe.
Where do you?
And as a lawyer, I must say that regulation is really like an advantage. I just said like Germany or Europe is like market leader, global market leader in regulation and crypto assets. And the US was kind of jealous that we had this regime and could, issue, all kinds of, or start all kinds of businesses, although in the Web3 world and so on. So we had this way before the US, and they always said everything is a security, and in Europe we say we have a regulation, we can build something. So as a US like headquartered organization, my organization said, Torsten, could we start like this business, Web3, like trading of tokenized wine and tokenized watches and arts? Could we start this in Germany? So we started this business under Mika in Germany, looked into all of this. And then, the US took up, they were quicker with the technology, we moved this back to the US. But, regulation is an advantage at the beginning, but also the industry needs to be quick. And that's a key point also maybe for the people in this room. If you don't know many of the terms and of the background and the politics and whatsoever, but the key point is that you get involved into this ahead of the curve or in front of the wave. You need to, prepare all different departments. You can't just put in the plug and say we go ahead. You have to train all departments, and that's the advantages of a early mover to say, okay, we even with the crypto ETNs, we dealt with custody and cryptos and looked at them like 7 years ago, and we understand them. We have like research teams and specialists and all of that stuff. And also finance and bookkeeping and administration, operations, legal. Everybody now understands this, and now we can go ahead.
Yeah, I have the feeling that we are very quick in Europe setting up regulations and forms, but then we need a lot of time to activate.
Yeah.
And once the US puts out the regulatory form, then they activate directly. So what is holding us back? What are the obstacles you see in Europe which are holding us back to going full mainstream? Maybe.
I think it's a very good phrase saying that from a global perspective, Asia delivers them the hardware, US delivers them the software, and Europe the regulation. So regulation, I think, is really key as a framework. Looking at the financial industry, lots of our core values is based on the fact that we have trust from our investors. And therefore, the worst thing which can happen is accidents like we've had it back in 2008 with the Lehman crisis, or even in the US with FTX a couple of years ago. And therefore, regulation really is in the foundation. And this was, as Torsten was alluding to, the big advantage we've had in Europe here for years, when the Americans didn't take digital assets, crypto in a serious way. But then under Trump, he was kind of, kissing the sleeping beauty, waking up the Americans on this topic, and what the Americans have missed for the last 5 years, and they get it done now within a couple of months. And that's the big risk we see here in Europe, not taking this dynamic serious. We are already there when it comes to tokenization, when it comes to digital assets. You've shown some of the market caps here in your introduction. So Robinhood today, to give an example, is bigger than Deutsche Börse and London Stock Exchange combined in terms of market cap. Coinbase is bigger today in terms of market cap as ICE, which is the owner of New York Stock Exchange. So this really should underline we are already there, and typically when looking at technology disruption, you get at one stage into a hockey stick where you see an exponential growth. And I think we are right now at this point, driven by regulation, driven by the stablecoin initiatives from the US. We have here in Europe the ECB fostering the topic of implementing wholesale central bank digital currency, which will come August, September next year. So this really should be a wake-up call for us as an industry. And I guess we've seen in history so many examples where leading companies in specific sectors, look at the German automotive industry. Germany was leading for decades, then they screwed it about 10 years ago completely up with electronic vehicles, and today they are in deep problems. And I'm sure looking 5 years down the road, 10-20% of the traditional incumbents in our financial industry, they won't exist anymore, because they do not take the topic of technology in combination with disruption transformation serious. And it's about DLT, it's about AI, it's about quantum computing, and this kind of a magic triangle going forward will completely redefine the financial market infrastructure. And therefore, as you mentioned, Torsten, first movers advantage is really huge. You need to get prepared for this. It's not done in 3 to 6 months time, but it takes development. You have legacy technology systems you need to adopt, and that's our role to assure that in the future we will be able to serve our clients in a very best way.
Yeah, just one thing in addition, because I think that's maybe the key driver. So we always say we should and they should and everybody should, but it's I should. And I think that's like the entrepreneurial part of the game, that the US, they are always thinking very entrepreneurial, and that's the advantage of being at Vanek. So Jan Vanek, our CEO and like owner of the firm, he says, okay, we manage 180 billion and we want to also have this kind of business in 10 years. And what does he do? He like looks into crypto, not like, I'm going to be retired in 5 years. I don't care. He's saying, okay, I'm looking at everything. There's an open sea. I want to buy some art. And then I want to give the art to my kids with like a token. And he, gets his own metaverse account and he does this all. Yeah. And I think that's the advice also to the audience. If you want to get involved with crypto, what I did, I just, I bought a nano ledger and put Bitcoin on it. That was the first thing. The second thing, I went to OpenSea, and there's millions of pieces of art, and you just build your own MetaMask wallet, and you buy some digital art, and you get into it. You understand it. Even if you're like nearly 60 years old, that's not a problem nowadays. You ask ChatGPT, how should I do it? You get like your advice, and you just go ahead. It's really easy, and I think that's the entrepreneurial part. People should just should also just do it if they are in charge for businesses, and not just wait for the next generation because they are in charge to push this.
Thanks. I still have a lot of questions theoretically I could ask, but maybe I'll just look in the audience if there's one or two questions. Yeah, let's go. Do you have a microphone?
I can also say
okay, yeah.
very loudly. I think the topic of stablecoins is something we mention quite often, but we always, in the context of stablecoins, it's all US dollars. There is no euro stablecoin in significant size. The largest one at the moment is from Circle, an American company. My question is, why don't any of you make a euro-backed stablecoin, a French company, a German company, to offer this service and actually bring euros to the whole world?
And I think the point you've made is with sufficient liquidity.
Yes. So we worked on a stablecoin in 2018. It was a very obvious idea. We had a big problem with the cash leg and what we call CSDR. Basically, if you need to move a security, you need to have a special accreditation. And we couldn't find a good way to do both. And you had to replicate the systems, which was very silly, basically. You move security and then you move it on the blockchain and you replicate the system. So it was very inefficient. It's true that the most of the big guys working in Ministry of Finance or regulators, they saw this move later. I mean, the figure we give right now is to say Tether, and it's the last report, so it has increased, is the 16th holder of US treasuries. It's more than Germany. So they will have a huge influence of monetary policy. And if we don't move, maybe these guys will have a big stack of euro and can negotiate directly with the ECB. So it's in the next coming years, there is a big threat. So everybody is aware of this. Everybody is moving. You have initiatives, All Unity from Deutsche Bank. You have 9 banks that united. But this is a European challenge. I agree with you. If if I was working at the Commission, I would have a sign saying you should merge all liquidity on a euro stablecoin to have a critical size. It's just a matter of time, and it's a matter of decision. The luck you have is that Van Eck is a great CEO. He knows crypto, and he has a plan. Jenny Johnson, Larry Fink. I won't give names from some French banks, but the CEO, they don't like these things. They don't understand. And because of this, and because of the sense of hierarchy, the chief strategy officer, he wants to keep his job. I get it. So he won't talk about crypto. So we have to go through this, and this is cultural. When you can explain things, you say it's cultural. So, but this is a key element. I mean, at BlackRock, Larry Fink, at Frank and Templeton, Jenny Johnson speaks very well about crypto. And for me, this is the main difference which should change. The CEO of banks should be implied, so all the line can execute. We are all survivors here, to be honest.
Maybe. First of all, I should have done the statement before. It's my own personal opinion, so it's not KfW's opinion, or it doesn't need to represent it. So, but if you look at the monetary system, you have to look where you're standing in. At KfW, first of all, we are government-owned. We have to have tasks from the governments to do this. So we are acting in central bank money. So the central bank money is basically out of the scope of the stable coins. So therefore, right now, we have no mandate to go into a private space basically to do this. And on the private side, we see two actors to embrace it. One is the stable coin, or in Germany or in Europe, it's called e-money tokens or arts, basically. That could basically take this part. However, you still have a risk associated, which is usually the banking risk of the reserve banks. Or the banks could come together and create a so-called commercial bank money token. So something basically which is representing the commercial bank money they are currently having, but on a DLT basis. But as it is always difficult to find in a competition or a co-opetition, basically. So basically find a common ground to basically see what you need to do in order to, to do together. So basically like an infrastructure and where the competition basically should start. And therefore, stablecoin could be a bridge. But unfortunately, stablecoins are 100% backed, so it doesn't basically, to foster growth as such as, for example, commercial bank money does. However, it's a means of payment. So therefore, I don't think it has to be a huge size as a stablecoin for being a payment system, because if we interact, if Christoph, for example, sends me 1,000 euros and I send him back 1,000 euros, it's coming up to 2,000, but we only need 1,000 as a stable coin. So therefore, as a payment means, basically, it doesn't have to grow in an exceptional size. And I think, as Christoph also will point out, stable coins are not yield-bearing. So therefore, why should you hold it? And the question is basically, in the end, who could hold it? And I think it makes sense outside of Europe. In certain countries it makes sense to hold it as an inflation hedge, basically. But within Europe, it's more a payment mean than something to invest in. Yeah.
Also happy to share thoughts from an asset manager's perspective. So point number one, why do we see a kind of hesitant pickup here in Europe? When you look at the US, what are the biggest issuers of stablecoin? It's Tether. It's Circle. Funnily enough, not the banks. Why? Because for banks, for commercial banks, it's highly disruptive, this product. At the moment, looking at the business model of banks, you get zero paid money from retail investors having it on the current account, as you were alluding to, Ivan. And you take this money and you lend it to other retail guys in format of mortgages or whatever, longer maturity, and you have a nice margin as a bank. Looking at stable coins, what's in their business model? Bert, he was alluding to stable coins, and they don't pay you any yield again. But this would be a substitute to money on the current account, and I guess in the long run, a stablecoin will be a payment mechanism, not an investment mechanism. And the big buck you make by not passing on accrued interest to your investors, I think this business model will be over, to be fair. So from my perspective, stablecoin will go more into the direction that it's a transaction fee-based instrument. And the Times, Tether, they made 13 billion euros dollar P&L last year with 150 billion dollar assets under management by just capturing the interest rate income they got from treasuries and they invested in, not handing it over to investors. I think that's a kind of arbitrage profit you make with a new instrument, but when it becomes more mature, I think we will more go into a transaction-based mechanism. And this, again, would be disruptive for the banking sector. And that's why, from my perspective, you see banks just reacting to issue stable coins, but not proactively chasing this topic.
Maybe last comments?
Just to say, the 13 billion is also coming from, they invested in gold and Bitcoin, which is not possible under MiCA or Genius Act.
Yep.
So therefore, we won't see on a stablecoin basis the high yields. We saw the interest rate yesterday was lowered, and I think it might be lowered in the future as well. So the difference is not that big. However, it's, it could be still a viable product. And the interesting part is, as I understand, SAP is putting it into their currency hub. So basically, on a transactional basis for a company, if you can choose, you do it with a euro or a US dollar, and you go via the corresponding banking system, which takes like 5 days, or you do it via a stable coin, which is 30 seconds basically. If you work with regulated parties, then the idea might be clear, what a company basically does if they choose. Yep. The question is, how much fragmented do we get? Do we need 150 stable coins? Probably not. The question is basically who can survive, who can do the best offering. Yeah?
Dominic, I know we are already in the extra time here of our session, but I would like to make one additional comment. Tokenized money market fund, you also raised it. I think that's for the industry the more sexy product, so to say. So from a visionary standpoint, when you have 24/7 trading, when you have second zero settlement, and you have tokenized money market funds, this will allow you as investors, regardless whether you are retail or whether you are institutional, to be permanently in yield-bearing instruments. And this was what Peter Radke, Global Head of Treasury, was also highlighting. I want to make my money work for me. And going forward, you will have a wallet, you have your tokenized money market fund in there, and when you start a payment process, you just have an AI bot converting your tokenized money market fund into digital cash. Is it digital euro issued by the ECB, or is it a stable coin? Then you have potentially a stable coin for a millisecond in your portfolio. You do the payment process, and the recipient of the money accepts in the stable coin, and via AI bot, he also will convert this money instantaneously in a tokenized money market fund, and bang, you are again in a yield-bearing instrument. And in this combination, showing the payment rail on blockchain and the asset rail on blockchain, that makes it really attractive. So it's not technology per se for the sake of technology, but it's really adding significant value to investors going forward.
Very, very short, as an asset manager and looking into tokenizing funds, the key, for me, the key idea is in, I don't know, maybe 5 years or so, to have a vending machine. And the vending machine, you kind of, throw your stable coins at the vending machine and get your ETFs right away, atomically. And you don't need to wait 3 days until you have them and know, it's going to be very easy, and that's the end picture. And of course, as you said, it's e-money tokens or asset referencing tokens for an asset manager. It's exciting to manage the underlying, but it's at the end, it's a payment business and something that is not typically something that an asset manager would do, even though Venek does something like that.
Dominic will shoot us when we kill it.
Yeah, I think we could go on forever and ever. But actually, the last topic was super interesting because it touched upon future in banking, and that is exactly the topic of our next session. So thanks so much for being here. I think most of you will stick around for the day. So if you have questions directly, please approach our panelists and have a one-on-one discussion if you have any further questions. So thank you very much.
Thank you.